Welcome back and thanks for staying tuned into Power Breakfast on CNBC-TV18. But now it's time to talk about the November's goods trade deficit data that came in at its highest ever monthly tally of $37.8 billion. This was largely due to the sharp 330% rise in gold imports to $15 billion. A 4.83% fall in November's goods export added to the deficit. Latha is joining in with us this morning to give us an insight and more details on that front. Good morning, Latha.
Good morning. Yes, a trade deficit of about 38 billion almost, only for goods, is a rather serious affair. We are used to a maximum of about 20 billion, the goods imports being more than goods exports. But this 38 billion is a bit of a shocker. And the key reason is gold. Gold, we normally import about 3 billion, 2 billion. It never goes beyond too much. This time it is 15 billion. So this entire, higher deficit seems to have come largely from gold. And the other reason is exports are not doing as well as they do. We do normally about 35 billion. This time we have done a tad less at 32. So goods exports falling and imports, especially of gold, rising are the key reasons. And the Commerce Ministry in the press conference explained that, our exports are falling because the world is not growing as fast as we are. And our imports are rising because the Indian economy is still chugging along fine. But then the key problem is that gold imports. That's risen partly because, of course, November was Diwali month. And also because there was a lot of asset diversification that we have seen, which, if you remember, gold prices globally had gone almost to $3,000, $2,900. There was this craze for investing in gold, and that could have led to the higher imports. Now, what are the other positives? Our positives are electronics. Electronics exports are up 55%. So that's a very good number. And in spite of the supposed global slowdown, textiles have not done badly. Textiles is the big employment generating sector. That's also up 10%. So at least it's not hit our, more important sectors, the global slowdown. What do we look for in the future? The first thing is that this very high trade deficit number is definitely going to... Okay, before that, I must say that the trade deficit has been is always smothered down by a good services surplus. In services, we export much more than we import. That surplus has come at about 17 billion. So this 38 billion trade deficit comes down to about 20 billion, 19.84 to be precise. Even that is high. Normally, we clock about 5 billion or so deficit. Now the deficit is like big, 19 billion. So today we should see an impact on the rupee. Already it closed at an all-time low of 84.91 yesterday. We must expect it to nudge towards the 85 per dollar mark today. And current account deficit for the first quarter, for which we already have the number, is about 1.1%. Now people will start saying that the full year deficit, current account deficit, will be about 1.5%. That's not all hell breaking loose. My sense is there are a lot of one-offs here. Gold is a one-off. Services exports are doing very well. So eventually we will be able to balance. And oil is falling. Crude has been falling. So in the fourth quarter, we will have lower crude imports. And therefore, this is not worry, but let's put it on our radar.
Okay, thank you so much for that, Latha. And keep an eye out on the rupee today, especially in trade.